Donald Trump has announced a deal. Tehran has confirmed it. So on the 19th of June 2026, a memorandum of understanding, which was brokered electronically through Qatari and Pakistani intermediaries, is set to be formally signed. Now, the headlines in Tehran and Washington, D.C. will scream peace, historic containment, and the triumphant reopening of the Strait of Hormuz. But behind the theatrical victory laps in both these countries lies a much colder reality. This is not a durable settlement. It's a temporary, high-stakes de-escalation mechanism layered directly on unresolved, combustible structural conflict. Here is the unvarnished reality of what is being signed, what is driving it, and why the clock is already ticking down towards a breakdown. So first, the leaked details of the negotiation reveals a 14-clause, two-layer construct designed to end hostilities and reopen the world's most vital maritime choke point. However, when you look closely at the numbers, the structural fragility becomes obvious. Now, in Phase 1, the Cash for Calm facility, which is the reality, this involved an immediate mechanism releasing approximately around $24 billion in restricted Iranian assets. Crucially, this is not a direct cash transfer. It is structured as a conditional, milestone-based credit facility for Iran. Phase 2 is the aspirational grand bargain, which I call the Mirage. This is a headline-grabbing reconstruction framework valued at up to $300 billion. So what's the catch here? It is entirely contingent on full nuclear dismantlement, intrusive inspections, and verified compliance by Iran. So you could safely assess that Phase 2 is virtually impossible to realize. The $300 billion figure is purely aspirational, a political window dressing to allow both sides to sell the deal at home. Now let's go to the domestic spin on both sides. There's two victory laps. Despite a recent military strike in Beirut and southern Lebanon and a history of brinkmanship, both countries are facing intense domestic pressure to declare an absolute win. Expect the political framework to diverge from two completely different realities. In the US, Trump will present this deal as a masterclass in coercive diplomacy. They will frame it as the ultimate validation of their maximum pressure strategy, asserting they've forced Iran into nuclear restraint and stabilized the region. While in Tehran, the IRGC will present this agreement as an act of strategic resistance. They will tell their domestic audience that they forced major US concessions, broke the blockade, and secured billions in upfront credit without surrendering their core sovereignty. But in practice, neither side has changed their fundamental stance. This agreement functions merely as a managed pause in escalation rather than a resolution of core disputes, especially around nuclear enrichment. So what's driving Trump? There's the invisible oil crunch. Let's look at the global energy markets. Global crude oil inventories are rapidly approaching dangerous operational limits. OECD inventories are projected to fall below 2.5 billion barrels in July, the lowest level since 2013, despite the fact that global consumption is over 10 million barrels higher today than it was back in 2013. Now, if the Strait of Hormuz remains disrupted, continued July stock draws risk pushing inventories below practical operating levels. This would trigger severe demand curtailment, strain global logistics systems, and spike prices. The impending energy crunch is the real catalyst propelling Trump to lock in a deal before falling inventories pull oil prices to politically catastrophic highs. Let's come back to Iran now. So why do you think they're cooperating? Iran knows the oil market is tightening, so why couldn't they wait another 5 to 6 weeks to maximize the leverage? Because Tehran is getting exactly what it needs for the short term. The current MOU secures an immediate Lebanese ceasefire, grants upfront access to vital credit lines, leaves their binding nuclear commitments vague and deferred, and crucially, leaves Iran in control of the Strait of Hormuz in a very ambiguous manner. Now, while some media and journalists and think tanks argue that Iran will not deliberately impede traffic once the deal is signed, a more realistic assessment suggests that Tehran will periodically reassert control through selective maritime enforcement. They want to maintain ambiguity. The path to true normalcy in the shipping lanes will be incredibly bumpy. Now let's look at the operational reality once you try and reopen the strait. Even after ink dries on Friday, June 19th, normal shipping traffic will not resume overnight. The ships currently trapped inside the Persian Gulf since February require ironclad assurances that the main traffic separation scheme in the strait has been cleared of the multiple, possibly thousands of mines that Iran has laid. Now, this will take several weeks for traffic to reach even 30 to 45% of pre-war levels. It's about 30 to 50 ships a day. Now, while international navies are efficient and demining could accelerate this, the full maritime recovery will take a long time. Think the rest of the summer, possibly even the rest of this year. Now, let's look at the breakdown of this MOU, the 60-day countdown. Day 1, so from today or from Friday, let's say, a formal cessation of hostilities between US and Iran will be signed, a public declaration of a ceasefire in Lebanon, and the quiet activation of Iran's credit lines. Now, in the short term, from Friday for the next 30 days, there'll be an intense ceasefire posture, the phased release of financial assets to Iran, the initial maritime de-escalation measures. The US will be expected to wind down its blockade of Iran gradually during this window. Everything seems okay now, but once you come from day 30 to day 60, that is important because the gradual normalization of shipping flows to the Hormuz will be paired with growing diplomatic friction over verification and inspection mechanisms in Iran. Now, this is the danger zone. This is when the re-emergence of disputes over nuclear compliance and inspection regimes is highly likely, because the underlying structural conflicts have been ignored by this MOU by Trump, and we could see a total breakdown and even a return to military escalation beyond the 60-day mark. And finally, we have Israel. The biggest threat to this deal isn't Washington or Tehran. It's the forces outside this agreement framework. Israel's domestic political incentives may drive actions specifically aimed at undermining or complicating this deal, especially if Tel Aviv perceives that the $24 billion credit facility strengthens Iran's long-term strategic positions. Furthermore, the Lebanon-Hezbollah theater remains a powder keg. Despite a formal ceasefire language, the risk of localized, deniable escalations could derail the entire agreement, which remains exceptionally high. Note that this is not a war between the US and Iran. It's a war between US and Israel with Iran. So, although Trump might have secured this memorandum of understanding with Iran, there needs to be compliance also from Israel, which we can safely assume will not be there. So what's the bottom line? Enjoy this diplomatic theater till the 19th of June. Let's watch the markets experience a temporary sigh of relief. But do not mistake a tactical truce for strategic peace. Trump and Tehran have bought themselves about 60 days of breathing room. What happens in day 61 will determine the real future of the Middle East. So what do you think? Will the deal last past the 60-day mark? Or are we looking at a temporary band-aid before an even bigger escalation? Let me know in the comments. And don't forget to subscribe for deep dive geopolitical analysis delivered straight to you.